Asian stocks were mostly higher on Wednesday after the U.S. Federal Reserve announced an emergency rate cut for the first time since the 2008 financial crisis in an effort to ease market concerns over the virus outbreak that might depress global economic activity. The central bank's decision prompted some traders to think the Fed might foresee an even bigger economic impact than markets fear. The yield on the 10-year Treasury sank below 1% for the first time in history, adding to signs of investor worries. Earlier, China, Australia, and other central banks have also cut rates to shore up economic growth in the face of virus outbreak, and it looks like the ECB will follow suit next week. Meanwhile, investors were unimpressed by a pledge from the Group of 7 officials to support the global economy that included no specific measures. As a result, the Shanghai Composite added 0.63% on Wednesday, despite the Caixin Market Services PMI plunging to 26.5 from 51.8 in January. Hong Kong's Hang Seng Index edged 0.22% higher after the release of IHS Markit's Hong Kong PMI, hitting a record low of 33.1 in February. In Japan, the Nikkei 225 closed marginally higher at 21,100.06. The Australia's S&P ASX 200 closed 1.71% lower, even though Australia's GDP for the fourth quarter rose 0.5% versus 0.3% expected. As a reminder, the RBA cut its cash rate to a new record low on Tuesday. Overall, the MSCI Asia ex-Japan Index rose 0.43%. European markets closed higher Wednesday as investors continued to digest the Fed rate cut that lifted hopes that other major central banks could follow suit. Traders now see a 90% chance that ECB will cut rates next week. The Pan-European Stock 600 closed over 1% higher, while the German DAX rose 1.3% and the French CAC gained 1.4%. Of note, amid further spread of the virus, Italy announced it was closing all schools, and Israel moved to tighten travel restrictions on 5 more European nations. As for the data, the final composite PMI for the Eurozone came in at 51.6 in February. On the other hand, the underlying surveys showed export demand falling and disruptions to supply chains beginning to take effect. The data painted a gloomier outlook amid supply chain disruptions due to the outbreak, but investors shrugged off the figures this time. In the US, Wall Street stocks jumped Wednesday, boosted by a strong performance by US presidential candidate Joe Biden in the Super Tuesday primaries. While stock gains were broad-based, health insurers were especially buoyant on expectations that Biden would seek more modest changes to the healthcare market in comparison with Sanders, who has sharply criticized insurers. As such, the US indices extended the recovery after their biggest weekly losses since 2008, seen last week. The Dow Jones Industrial Average finished the session up 4.5%, the broad-based S&P 500 jumped 4.2%, while the tech-rich Nasdaq Composite Index surged 3.9%. In currencies, the dollar was mixed against the majors, with Euro-USD struggling to regain the upside momentum after a brief jump above the 1.12 barrier a day earlier. At the same time, the downside pressure was capped by the 200 DMA around 1.11, GDP USD meanwhile extending the recovery from mid-October lows registered around 1.2725 late last week. The cable rose to 1.2880 and could retest the 1.29 figure should the upside pressure persist in the near term. As for oil, Brent crude declined slightly on Wednesday after failed attempts to retarget recent local highs marginally below the 54 handle. The futures have settled below the $52 figure, with trading activity getting lower ahead of a 2-day OPEC Plus meeting that begins today. Depending on the signals from this front, Brent may regain the $55 area or plunge below $50 again. Anyway, the volatility will likely pick up again in the near term. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.